Welcome back to TCPA Trading Code. If you are here, you are committed to moving beyond guesswork. You are committed to building a trading approach rooted in absolute precision, rule-based logic, and scientific rigor. This is not a channel about luck. This is about engineering and edge. Our mission is to give you the most robust, careful, filtered system available for high-frequency price action. We'll be building our entire framework piece by piece, starting with the most overlooked element, the foundation of the trend measurement. Let's jump into the first section of the lesson. Rethinking the trend. Every trader is taught the classic foundational truth. An uptrend is a series of higher highs and higher lows. Or if it's for the downtrends, lower lows and higher lows. So for the ranging markets, it's just a range, and for the choppy markets, vice versa. You can confirm the information, or if you want to edify yourself more on such kind of things, all this information is on the internet. You can go throughout all the internet and you can get almost whatever you want regarding these things. The road is timeless, and every indicator, algorithm, form of ordinary algorithms to even time algorithms, no matter how complex it is, it revolves around this core concept. Now, this examples, I've just given an example here about an uptrend. If you can see, we have a couple of higher highs and a couple of lower lows. And for the ranging market, as you can see, there is a range, and the difference between a choppy market and a ranging market is that in a range you normally have some trends in between. Just like you see, this is a trend and a trend, a couple of trends. And when it comes to the downtrends, the same things, the same logic still applies, but it's the inverse of an uptrend. Now, when we are operating on a 5 seconds chart, a high speed environment where price is in constant motion, traditional definitions of interpreting the concept is simply too slow. Because we use bar by bar to visualize price, we need a standard that is clean, immediate, and measurable on every single bar. This brings us to bar by bar trend analysis standard. To build the TCPA Trading Code, we must first establish our own internal standard measure of trend strength. We will keep it simple and effective. 3 bars moving consecutively on the same direction constitutes a minor trend. This is the minimum measure of directional commitment we accept. 1, 2, 3. That on its own, it validates the trend. We also have 1, 2, 3 for downtrends, and there must be a shift. Before anything, we should have a shift in the market, and a shift meaning that if you observe, you have a red bar, and then the market shifted from a red bar to a green bar, and from this green bar, that's our first count, the second and the third. Now the third bar confirms an uptrend. Same thing for downtrends. We have to have a shift in the market. Then 1, 2, 3. The third bar confirms a trend also. Now this concept, it's just to spot the minor trends. Once we see 3 bars, we know that we are in an, for example, for this bullish trend, after this third bar, we know that we are in a minor uptrend, but we can be in a minor uptrend whilst we are in a major downtrend, or sometimes it can be in a downtrend and the minor trend also um, point in the same direction with the major trend. Any price movement consisting of 2 bars or less is strictly classified as a retracement. I don't have any illustration here to explain that, but let's just use the first illustration. This green bar, if it was the third bar, meaning if we had something like this before and this was the third bar, then this 1 2 bars, there would be a retracement for this case scenario. Besides that, then let's move now to the second illustration. Now we had 1 2 3, it confirms a trend, right? Now 1 2, we know they are still, we are still in a minor uptrend in this case scenario, but here we are in a, we know that this is a, if we had something like this as an example, we know that these 2 bars were still in a minor uptrend, but 1 2 3, after this third bar, now this would be a confirmation for a downtrend. I do believe maybe okay, so I think if, but this concept of the trend, it's quite simple. Basically, 3 confirms a minor trend, and after the confirmation of a minor trend, like we know as traders that you can't really trade against the minor trend. It's really devastating if you can do that, especially if you're trading binary options. You shouldn't actually try and trade on minor trends. You only want to trend or to take part or on the major trends and so on. So like for example, I was just using this pseudo as an example, uh pseudo illustration as an example to when we, if the 2 bars are in a retracement, and because any bar or any price movement consisting of 2 bars or less uh, is strictly classified as a retracement. That means this, for the first example, was showing when we have the 2 bar retracement, but on this illustration now, here we had a 1 bar retracement. I would get more into this topics and explaining everything in details in the future. For now, we don't have that much time. By implementing this clear objective rule, we gain foundation necessary to move to the next level, ensuring our entries are fixed on trend continuations. Like I was saying, we are always aiming for those trades where we are supporting the minor trend. We don't want to trade against the minor trend at all costs, and in most cases we even want to trade we want to, if we have a major uptrend, we also want to do minor uptrends, trade minor uptrends. Same thing applies for downtrends. And if you are in a ranging market, then that's when we need to even be more careful and selective about our entry signals. To create the most robust system, we must not just spot a trend, we must manage and count the trend from its genesis. Our goal is to execute entries that are fixed, consistent, and systematic. For example, we may choose to always enter after the second bar of the new trend, making that our unyielding rule. This fixed point is the trend cycle This fixed point in the trend cycle allows us to dedicate our study to the precise price behavior that occurs only at that consistent moment, eliminating the randomness that destroys most trading system accuracy, compromising the trading accounts at the end of the day. So it depends. We can even not just uh, make our entry positions after 2 bars. We can even make them to be after 3, depending on the criteria that you are setting, or depending on the behavior of the asset we are trading. But for my strategies, I prefer to enter after 2 candlesticks because it's not too late, no, um too early. It's just right on time. That's for me anyways. So these vertical lines that you see in the illustrations, they show each time when we have a peak. So we had a peak right here, peak, and we also had a peak, and a peak. But not all of them were valid. And the horizontal cut lines, they show our entry levels. So basically, because we start to count the trend from a shift, here a shift, then 1 2, after 2 bars our entry position is just right here, and this is our output bar also. And with this output bar is the one which tells us if we had a 1 bi or a 0 bi, because sometimes the trend can reverse like it reversed, or it can continue as it continued after 2 points. And also the peak, it consists of a variety of information. Like if you'd observe the couple of information varies in a peak. Sometimes you hear this kind of peaks is different from when the price have broken through the previous high. And also it's different, the difference becomes where we look at these 2 bars. Sometimes, you know, the last bar have pressure, more selling pressure supporting the direction of the trend. Sometimes we just get weak candlesticks. It just depends. But basically I was just trying to explain the illustrations here. The cut lines, they just represent that the peak existed. And when it comes to the counting of the bars, I've written C hash on some other bars. C hash meaning it's the same thing as C1. That means it's the first candlestick of the trend. You'll keep understanding more of such things if you stay and watch these videos up until the end. Let's move on to the next part of the lesson for now. The entire analysis from the preceding opposite trends information through the 2-bar continuation entry point is what we call a peak. Meaning, let's use this example, this vertical line. We have the previous information, this is the previous trend, and we also have the 2 bars after the peak, and those 2 bars, that's a new trend obviously. So it's, we have the opposite trend and it have its own information, and this C2 bar is the bar which confirms it, that the peak is valid. So the TCPA Trading Code is the comprehensive detailed framework we use to analyze the peak. First, we look for the first sign of the trouble, the shift, the smoke in the house. And we have quite a couple of shifts, but the shift is just, there are 2 kinds of shift. Shifting from a, shifting from maybe an uptrend to a downtrend. Like in this illustration, this was an uptrend. Now we shifted to a downtrend. Same thing. Or shifting from a downtrend to an uptrend. So these are the 4 kinds of shifts that can occur in the market. I've written the 2 of them simply because there are a couple of differences when the market is moving. Because if you look, this is a shift, it's a down direction shift. This is a down direction shift also, but if you look at the highs of this bars, you'd see that there is quite a lot of difference. We then perform a deep analysis to confirm if this is the real smoke of fire or it's just a fake opportunity. This involves assessing pressure, strength, and clarifying the analysis to classify the peak as positive or negative, and so on. A couple of all those steps, I'll just make a separate video explaining them in details as time in the future. So if the setup is validated through every single step, we move to observe the output performance of the trend. So on the right diagrams or illustrations, if you look at these arrows, they show that this is where we wait for the output bar. So the output bar, like if you look at the first illustration, we have an uptrend 1 2, but no, the output bar, it can either become a trend continuation or a trend failure. So these 2 arrows, they are there to represent that the outcome can either become an uptrend or a trend continuation or a trend failure. If it becomes a trend continuation, we can label that as 1BI. If it becomes a trend failure, we can label that as 0BI. And also the difference, the other things like classifying if the peak was a positive trend peak or a negative trend peak. Well, this information, the reason why I've drawn this as separate is to try and make that information very clear. So we had an uptrend in the previous moment, and if you look, we have the high and price on the next move. It just opens and then rushes down without making a retracement or anything. And if you look at this one, now this one is different from this one because on the shift or this bar, shifting bar, now the movement before it closes, it broke through the previous high and then sharply rushed down, creating a very sharp movement and closing in an opposite direction, making a peak. So that's it about the positive trends and the negative trends. And I would make a video explaining how we can do the analysis, because we have 2 kinds of analysis. We have a linear kind of analysis, and we also have this kind of analysis whereby we don't go linear. We just look for the most necessary things and then fill them, and after filling them, then we'll get to know the binary output instantly. So such kind of analysis, you choose which one is perfect for you. And by the way, this would come in the future. To give a glimpse of the precision we are building, I will make a class on explaining everything we have just talked about on some real charts also, and I'll also do that later on, doing some kind of live trading both on demo account and live account. So I think for we can move forward for now. Things would get even more clearer in the future. These are just the short notes which if maybe you can take some screenshots, you can reference to them later on, because if not so, then that means the information will only be available maybe in the book, of which is not yet out currently. So moving on to the next section of the lesson, the analytical leap. Once we have confirmed a complete valid peak, its performance, whether it moved up or down, we record the output. This performance becomes our raw data translated into simple binary number 0 or 1. In the upcoming videos, I'll start using the zeros and ones to create sample groups. This is where the magic of the TCPA system truly begins, allowing us to formulate entry strategies based on verifiable statistical behavior of this binary data group. So on this short notes, what you are seeing here is don't really worry about all this. It's not that you'll get to understand it as time goes on, and if you can focus till the end. So like if you can see the introduction to poker, basically the introduction that's a way on which we can read and interpret price, or a particular way of analyzing price uh, using the TCPA Trading Code. And this would include the data flow diagram, equations for driving the binary numbers, and if you look down here, we have some it's not these are not strategies, by the way. These are just some rules or logics we use. The first video I've just explained that we have 64 rules, which we have now then combined them to make just 8 different logics. So these are some these are the logics I was talking about. I've written only 4 of them, but there is another 4. It's completely the inverse of this. Just that on this ones I've just mentioned for the positive trends. If you look, this is positive trend, positive trends, positive trends, positive trends, but we also have the negative trends in the market. So on the left we have the strength of the trend, if the trend is strong or weak, and this PI is for pressure. That means that we are accessing the trend strength through reading the pressure. So we have strong plus positive plus trend continuation. That's the one BI. That's the first equation. I would explain this in the upcoming videos in details, what they truly mean and how we can you put them to work. And we also have strong trends, positive trends, trend fail to continue, that's 0 BI. Weak trends, positive trends, the trend continue, similar to that one. The difference is the strength of the trend. This one is weak, this one was strong. So we have 0 BI, and so on and so on. So when we get into the right, this is the complete peak and its output. So this is the output bar. The third bar is the output bar after the entry. So if we look at the left hand trend, price increased in its static movement. We can say it increased in momentum, and we also have the pressure is indicating more buying pressure, and we can, the conclusion in this case is that we have a strong trend. Now on the right hand analysis, you have a positive trend. Price broke through the previous level, making a new high before it made a sharp shift to the downside. Now after the entry level or the entry position, that's where we wait for the output. Now the output, as you can see, the trend continued, and this whole setup or the whole thing is the same thing as what we see here. Strong trends, positive trends, and trend continuation is equals to 1BI. So basically every time when we are reading the market, every peak which can come like this, we know that it's equals to 1BI. So we record the binary as 1BI. So this is what I have just explained here, and same thing, peak analysis, trend strength, you get it from the left hand, peak nature from the right hand, the output if the trend continued or failed, it's down there. Now finally the binary number. So never mind really about the inverse and the normal variable. You'll get to understand that in the future, and it's just ways. Don't really, you know, give yourself a lot of headache about such things. Now take this seriously. We are replacing emotions with data and guesswork with a rigorous code. Subscribe now. Prepare yourself to learn the most important component of the TCPA trading system, how we analyze price to spot a valid peak. Hope I'll see you again on the next video. Goodbye.